Welcome to the August Spotlight on Investments, brought to you by producersweb.com. I'm Paul Wilson, and in this broadcast, we'll cover some of this topic's biggest trends and most insightful research. This Spotlight on Investments is sponsored by Brokers International, one of the nation's leading marketing organizations. Experience the new world of insurance marketing at www.biltd.com. Investor confidence rose among affluent investors in July, according to monthly data from Spectrum Group. The research group said that its Spectrum Millionaire Investor Index climbed 4% for the month to negative 16. The increase follows June's decline of 18 points, the index's largest one-month decline since it began in February of 2004. In addition, the Spectrum Affluent Investor Index, used to measure the outlook of households with $500,000 or more in investable assets, also rose, climbing 1 point to negative 19. Finally, when asked about the one factor most affecting their investment plan, 26% of respondents cited stock market conditions, 16% listed the economic environment, 8% said household cash flow, 7% listed the political climate, 3% cited retirement, and 2% listed household income. Bonuses in the financial services industry are expected to rebound from a down year in 2008, on pace to rise 25% to 35% in 2009, according to Johnson Associates, Inc. Alan Johnson, the managing director of Johnson Associates, says, quote, "The industry is getting back to some degree of health. The industry is moving from pneumonia to a bad cold. 6 months ago, things were looking a lot more gruesome," unquote. Traders in investment and commercial banks are expected to fare especially well, with bonuses expected to be 20% to 50% higher than they were in 2008. On the other hand, those in the asset management businesses will likely see a drop of between 25% and 35% this year, as bonuses are tied into asset levels. Meanwhile, those who trade equities or fixed income securities are not affected by the markets, so will not be affected by recent economic unpredictability. The values of fixed income securities are expected to fall over the next 2 years and will take a toll on the financial performance of life insurers, according to a recent Towers Perrin poll. 72% of the 27 chief financial officers surveyed for the poll said they expect lower fixed income security values will hinder their financial results during the next few years. Meanwhile, 80% said they believe carriers' surplus and capital will be most affected by the current economic climate, while 76% believed their company's balance sheet would be hardest hit. In response, 59% said they were acting defensively by increasing their attention to risky asset classes and holding on to more cash. In addition, 67% cited credit spread risks and interest rate risks as the biggest risks to carriers' asset liability management, while 76% said they expected treasury rates to rise quote-unquote moderately by the end of the year. Finally, 60% of respondents said they dealt with basis risk in their hedging programs during the financial crisis, while 47% said that market illiquidity had posed a problem during the recession. I'm Paul Wilson, and thanks for watching the Spotlight on Investments. To see more video spotlights on your favorite products and practices, find them on producersweb.com and browse by topic.